What's up, everybody? This is Jimmy with Trading Decoded. It is March 5th, 2025. And that picture in the thumbnail is there because that's what your face probably looked like when you looked at the cost of the contracts today. Holy smokes. I thought yesterday was expensive. Today was worse. And it's still expensive. That makes a lot of people hesitate. And it's understandable. And we start to change our normal trade plan when this kind of thing happens. I would advise, I can't use the word advise, I would suggest that you not do that. If you have to, take a smaller position, but more importantly, the truth is, if you're uncomfortable, regardless of what the cause of that level of uncomfortable is being created from, do nothing. Do nothing. The worst thing to do is to trade when you're in a situation that you're not comfortable in. Just like that's the case with anything else you do in life, right? You're not going to perform at your best. You're going to be hesitant and all the things. And that's what trading on a day like today, no matter how much money you got, when your position size costs 2 and 3 times more than what it normally does, that plays a factor on your decision making, whether it's creating hesitation or scaring you out on a normal pullback or, having you stop out or take profits too soon because the numbers move fast and they're big and all the stuff. But without getting too much into that, I just want to explain why that thumbnail is what it is today. Today I took 2 trades. First one was a little sketchy, a little uncomfortable. Ended up only being a 3.3% win, which I'll show you here in just a second. Still, because of the cost of the contracts, 3.3% actually allowed me to make my goal for the day. I actually set a stop loss in profit once I got the opportunity to do so. Left some on the table, but got stopped out with my normal amount that I hope to make each day. However, I did take a second trade. That trade was looking much better than the first one was, so I felt a lot more comfortable doing it. That one ended up producing a 28.2% win, which was a beautiful trade for me. Overall, the entire community is green. Not everybody in the community is green, but I think we have 19 red and pushing 100 green at the moment, which is a 5-to-1 ratio. That doesn't suck. But let's go ahead and take a look at the charts and go over what we found and why. So let's go over, sorry to the people who are still watching my charts trying to trade. As we normally do, guys, we are looking for support resistance levels that exist near pre-market. And if we get through them, we're expecting us to go down to a next level of support or resistance, okay? Now, today, the market opened up pretty green. I mean, everything looked to be pretty happy at the moment, but because we were putting in lower highs into the open, and we had a put line right here on the Qs at 495.83, we were simply looking for it to quickly go down to 495.31. About a 50-cent drop. We're not looking for a long move. We're not looking for a big move. I mean, 50 cents with leverage pays pretty well anyway. Our call line on the Qs was 497.27. Now, I did suggest that I was going to wait on the call side for a candle close above that line. And I say that because it was a strong resistance going into or during pre-market. I didn't want to mess with that too much, okay? So for me, the calls were not going to happen unless we closed above this line. Puts, I'm willing to take on a breach, and hopefully we just make a quick move down. That's exactly what happened. Now, did your boy get out there? No. No, he didn't. I completely ignored what ADD was doing. ADD was on a rocket ship to the upside. That made this hold uncomfortable. However, if you look at the Qs chart and the SPY chart, SPY didn't really get down to where I wanted them to go. I wanted SPY to get down to this support, which it did on the first candle, completely bounced off of it. I ended up getting in here because Qs were crossing the put line, and I wanted to get out down here on SPY. We never got there on SPY. I held on a little long. This pullback really hurt and sucked, but Qs maintained a downtrend during that time. The only thing that was making me nervous was the fact that ADD was on a rocket ship to the upside. So as I'm holding on to this trade, I'm telling everybody, guys, I really don't want to get into calls because I don't trade against the Qs, but Qs are putting in a downtrend. I know ADD is aggressively going up. This is not going to work out well if the Qs hit a support that they end up holding, because with ADD doing this and then Qs finding any support in doing this, you get this, okay? Big move in the other direction. So once we got back down to the place where I could get out with some profit, we pushed down a little bit lower. I put a mechanical stop in. It pulled back shortly thereafter and stopped me out of the trade for a small win, 3.3%, okay? That wasn't my brightest trade today, but it was a trade nonetheless. However, the second trade of the day that we looked for, or I took, was coming off of completely different circumstances. ADD stopped moving up. In fact, it was trending down. SPY and Qs were coming off of lower highs. We're expecting support to fail in this circumstance, and we wanted to continue down to the next support. So, for all of those reasons, and oh, by the way, NVIDIA was breaching a level of support that it had created today. All of those things combined is what gave me the confidence to take puts for this second trade. We got down. It started. We were hoping it was going to pull back a little bit more. Most of us stopped out on this wick when it started to pull back. And that was it. That ended up being a 28.2% win. That was a beautiful trade. And for me, that was it for the day. Happily so. Okay. But then we were also getting close to 10 o'clock. We don't like to hold through 10 o'clock candles, guys. Why? Well, because at this time we were trending down. Everything looked like it wanted to potentially slide down. But we don't know which way those 10 o'clock candles are going to go. You have no clue. A lot of people, when they're red in a trade leading into 10 o'clock, they tend to want to hold onto those trades, hoping that that candle helps them. But if it doesn't, sometimes it can hurt a lot. This was a $3 plus candle. Crazy. This rips your face off. Okay? Not a good place to be looking for calls or holding on to puts, obviously. So when 10 o'clock comes around, guys, always remember it's a gamble. Don't hold through it, okay? It's not wise. Sometimes it'll work out. Other times it won't. Could turn a really good day into a really bad day. However, after we shot up there, we hit that same resistance, which was our call line on Qs, but something changed. We didn't come back down to support because we were basically in a really ugly channel on the Qs. What is this? This is a higher low. So because a lot of people had a put bias today, whatever the reason was, we were being extra cautious. But rules are rules. We don't want puts coming off of higher lows. So I'm marking this X here because a lot of people were saying, Jimmy, that's a strong level of resistance. Would you buy puts here? The answer is no. Now, I don't know if this resistance is going to hold or not, but I do know that this is a higher low. And higher lows are bad for puts. I'm of the belief that we're more likely to break this resistance and head to the next one than I am that we're going to come reject it. That's it. You don't see an arrow here because I wasn't going to take the trade, and I probably wouldn't have. But if you can get used to this rule right here, I am telling you, it'll help you get into trades that are more likely to win and keep you out of trades that are more likely to lose. If you respect that rule, you'll be in better shape. I'm telling you. Okay? Likewise, we hit that resistance. We start to come down. Guess what we put in? Lower highs. What are lower highs bad for? Calls. So now we don't want to be buying calls on the support that we made on the way up. Instead, we're looking for a break of that support and to continue down to the next support, which was all the way down here. Now, this was a beautiful trade because it gave us a lot of room for potential movement. So we were looking to go from 496.04 all the way down to this support right here at 493.70. Guys, that's over a $2 move. And there wasn't much fight in the way of getting down there. So this ended up becoming the trade of the day. It was a fantastic trade. I wish I would have just taken that one, but I don't have that kind of patience. So the entry was because we come off of a lower high, ADD is trending down, we're breaching support, looking for the next support down. Even if you waited for the close below, we're looking for the next support down. Dude, it did that. It did it cleanly. We bounced off of it, came right back down to it again, couldn't break through it, and up we went. Okay? After that, things got a little ugly for a little bit, and then we started to create another downtrend. ADD started to get a lot more aggressive to the downside. We picked up on this and we said, hey, guys, I know we've had strong support levels down here, but at this point, I'm thinking more like we're likely to break down because ADD is now getting more aggressive to the downside. We're coming off of lower highs on both charts. I had said it before we got down here that we're more likely to break this support. We'd love to get all the way down to this line where we had an alert. As you could see, we got just a few cents off of it, never actually touched it. So kind of didn't work this time, but several opportunities to get out with some profit. And if you held long enough to get down there, you could have uncomfortably waited until we got close to where we were aiming for. Nonetheless, that ended up being the last trade that we were willing to take or willing to find. And then after that, we had some kind of a crazy report. And it wasn't even a report. I think a headline was they're talking about delaying the tariffs on Mexico and Canada for another month. Guys, we are living in a situation right now, politically, in this world, where a headline can completely change the trajectory of the charts that you're trading for the day. This kind of price action is exactly why I don't like to hold my trades for very long. If you're trading different types of technicals, for example, SMAs or crossovers or RSI or any of that stuff, indicators wise, you can't prepare for a move that happens this quick. Okay. And quite frankly, you can't prepare for it if you're not trading, technicals like that. Pure price action, right? The only thing that would have gotten you out of this trade before this big quick move up was the fact that we broke the downtrend, which should always be a reason to consider getting out of a trade. But these types of moves, these violent moves in opposite directions, they don't bode well with me. I don't do well with them because I've been in the past a guy who's trying to squeeze more out of a trade, notice that it's not happening quickly, it starts to struggle. My fear is these gigantic candles that go against us, okay? That is why I prefer line-to-line trading. It's why I try to get into my trades and out of my trades quickly. I use leverage for that reason, right? I scale up a little bit. I use a higher leverage so that I can minimize the amount of time I have to spend in the market. My way of trading is not for everybody, but I can tell you, you don't need indicators other than your eyeballs, and you don't need really anything on your chart other than some lines that you draw based on where we know buyers and sellers exist, and understanding how to read price action. And we explain all of that in our daily Discord all day up until 12 o'clock every day from 9 o'clock till 12 o'clock Eastern. And we explain it all over the place right here in this book, which you should pick up because it's fantastic and it's very helpful. All right. So if you guys got any useful information in this video, please like, share, and subscribe. If you'd like to join our Discord community, well, I'd love to have you. There's links down below. All you got to do is show up. Your free week starts immediately at that point. No signing up. No credit cards need to be put in that you're going to forget to cancel before your 7 days is up. That's how they get you sometimes. But nonetheless, I hope you like what you get for those 7 days and maybe consider becoming a paying member. If you don't, my goal is that you learned something that helps you become a better trader. Other than that, we're going to wrap it up. I hope you all had a great day in the market, even though it was crazy expensive. If you blue booked it today, i.e. you didn't take any trades, totally understandable. Hopefully tomorrow is a little bit less expensive, but these movements are big. We're having good months because we're catching good moves. Okay. So with that said, you guys enjoy the rest of your day. Till tomorrow. I love you.